Hello, entrepreneurs. Joe DeChara coming to you live from downtown Bethpage, Long Island, New York, for another early edition of How to Win a Business. And what I'd like to do is, if you're watching live, give me a hashtag live. If you're on the replay, give me a hashtag replay. If you have any questions, please feel free to comment in the chat and I will get back to you, guaranteed. If you want to connect with me, this is how you do it. You go to where is it? Timewithjoe.com. If you need to book an appointment with me on any business or tax related subject. And the announcement that I have today, not that I always have announcements, but we have our monthly workshop tomorrow, and it's going to be all about how to cash in on your business now. And I think this is going to be the general theme of our workshops and our business, really, because we specialize in doing bookkeeping for really small companies. And the companies that don't want to do it or are trying to do it themselves, and that's just for the foundation. That's the foundation of your business. So if you want to find cash in your business, you got to have books and records. You got to start somewhere. And that's the only place to start. Uh, That's a fact. There's no way around it, people. So if you want to be, a procrastinator, somebody that wants to stick their head in the sand and not pay attention to their business, I'm drawing back the curtain, as my friend John Limbacher would say. Opening up my secret chest, even though it's not a secret. I talk about this stuff all the time. But instead of going about this in a roundabout way and talking about, stealth tax strategies and, we got your back, let's call it what it is. And my friend Larry Broughton says this all the time: call it what it is. And we're going to help people find the cash in their business any way we can. If that's, streamlining their operations, if it's finding hidden cash, in other words, cash that doesn't actually uh, isn't actually cash. It's the time suckers. The time management is really what it comes down to. If you think about it, it's not the numbers, it's the how many people can you manage effectively given the amount of time that you have. Now, here's the thing: we all have the same amount of time. It's been drilled into me. Everybody gets 24 hours a day, or 23 and change. That's why we have leap year, I guess. My mom was born on leap year. But, the fact is, folks, whether you like it or not, the people that achieve massive success, and even success, that is massive, that nobody hears about because they don't go around talking about it. But there's people that are very, very successful. Maybe they're not billionaires. Maybe they're just normal people that just found the solution. And the solution uh, is really in their bookkeeping. Because it's one thing to have money, but to know how much you have is kind of important, because then you can know how much you're allowed to spend. Who did I just hear about? Somebody that had $100 million contract, one of these sports people, $100 million earnings, and he's bankrupt. It happens all the time. Lottery winners, because they don't get the simple bookkeeping down. So one of the secrets, and again, it's all of these secrets are not secret. It's public info. All you got to do is go on my YouTube channel and subscribe, because I keep putting new new videos up there all the time, including this one. This will be up there. And some of the ways that you find money in your business is by running your business better. And that starts with your business structure. Now, again, I laugh and I talk about this all the time because in the CPA world, it's normal for businesses to be an s-corp, especially single owner entities. I don't think we would have a business client that didn't own an s-corp. That's how common it is. So it's widely known, not broadcast, because most accountants aren't like me. They're not on YouTube. They're not on Facebook Lives talking about this stuff. And the reason why I'm talking about it is because there's a huge problem out there, folks. There's a huge problem with over 25 million business owners still being classified as sole proprietors. Now, what does that mean? It means that when you start a business, you have no choice, because you're automatically under the jurisdiction of the IRS, who says that every business has to keep what they call books and records. So they claim, and they're right, it is the simplest form of business. There's really only two others that are available to a single owner entrepreneur. In other words, somebody that is the only owner of the business. There are no partners. There are no uh, other members if you're an LLC. And that's really what I wanted to talk about, is the LLC issue. And it's the entity of choice. Now, just about everybody uh, thinks about being an LLC, and because LLCs are searched probably 1,000 times more than corporations or s-corps, which is another uh, form of corporation. But the LLC, now let's talk about the LLC. First of all, the LLC, what that stands for is limited liability company. You're legally limited personally. You have personal legal protection in the case of any kind of uh, creditor lawsuit. They can't go through the LLC as long as you operated as an LLC. If you operated as what they call an alter ego, in other words, you did all your business and personal business through the LLC, it might not hold mustard. But let's say you owe, Home Depot or a credit card only in the business name where you didn't sign personally. Uh, they can't sue you if you go out of business. They can sue the LLC, but they can't sue you personally. Uh, if there's any kind of other charges, and I'm not familiar with, if there's any other kind of civil charges, it doesn't come through to you personally. Uh, I think if there's like an accident, I mean, you still have to have insurance, but I'm not a lawyer, obviously. I'm a CPA entrepreneur, but you don't want to get sued. Now, that's an option. Now, the only problem with this is that the IRS doesn't know what an LLC is. And what I mean by that is they know what it is. I mean, it's a legal entity formed at the state level. But what they don't do is they say, well, we're not creating a whole nother tax system for the LLCs. We're not creating a whole nother set of forms, a whole nother set of instructions. No. If you want to be an LLC, that's fine. And this is what we're going to do. You're going to be defaulted, what they call the default classification. And what that means is that if you're a single member LLC, they classify you as a sole proprietor. Again, there's a problem with being a sole proprietor, and I go through this in a lot of my other videos, in my book, the Itty Bitty S-corp book. I write about it on my blog. And the problem is, four main problems. Number one is you get taxed on 100% of your net profits on Social Security. You got to pay Social Security tax on 100% of your net profits. Now they do give you a small, adjustment, which they justify as that even the playing field. But let's say you still got to pay after the adjustment. You're still paying, let's say, 12%. It's not a straight 15%. So 12% of, let's say you make 10,000, that's still $1,200. That's a lot of money when you're only netting $10,000, because that's only Social Security taxes. So, there's the Social Security tax problem. There's the audit problem. The IRS loves auditing sole proprietors because they're usually sole proprietor because they don't have a CPA telling them not to be a sole proprietor. They get no respect. Okay, sole proprietors get no respect in the business world because nobody cares on the golf course that you're, Joe Schmo from Idaho, not incorporated. You're not the president of anything. You're not even a member. You're just a sole proprietor. You're a single owner entity and you're limited, and people know that. And because of that, the banks don't want to deal with you. The insurance companies don't want to deal. Not that they don't want to, but they're going to deal with you on a personal level because that's how they see you. You're just a person. You're not a business entity, and you're not really a separate legal entity because your business and your personal are commingled. Now, choosing an LLC again means that if you're a single owner, unless you tell the IRS, you could tell the IRS after the fact that, oh, by the way, I really want to be taxed as a corporation. And then you say, well, yeah, I want to be taxed as an S-corp because that's a whole nother step. You go from LLC to being taxed as a corporation to telling them you want to be taxed as an S-corp, which is a small business corp, which means that there's no corporate level tax. Okay. Uh, so the other thing is I'm not anti LLC. The LLC entity is a great entity for passive activities, such as if you're in the rental real estate business, you want to do an LLC. You don't want a separate corporation. You don't want to have to file a separate tax return because there's no reason to, because taxation of passive activities, which are owned by wealthy individuals, the taxation of passive activities is different. What a surprise. The wealthy people can invest in passive activities and they have tremendous tax benefits. So if you're in a passive activity, if you have money and you're investing in real estate, in oil wells and stuff like that, you might want to be an LLC. Also, if you have partners, if you have other types of entities that you want to, shelter your legal liability and have multiple levels of protection, that's what you use LLCs for. People put assets into LLCs. They put, you know, assets in LLCs. And again, that goes with estate planning. I don't do really a lot of estate planning at that level, but you can put assets in an LLC. But when you're talking about a single owner, small business, the entity of choice is an S Corp. And that's my story. I'm going to stick with that. It's always been like that for over 40 years that I've been in accounting. They created the S Corp in 1958 before I was born, and I'm 61. So that's over 60 years the S Corp has been around for sole proprietors. So ask yourself this question. If there's 30 million businesses and a legal entity was created by Congress for a certain class of individuals, how come more people aren't S Corps? How come more sole proprietors aren't S Corps? And that's the question that I've been searching for and trying to answer for the last 3 years. And if you have an answer, please share it with me. And if you're around and you would love to get me live in a workshop, you could ask me anything tomorrow at I think it's 1 p.m. Eastern Standard Time for our free workshop, uh, which is how to cash in on your business now. Now, meaning immediately, tax credits, tax reductions. Find out how by your next paycheck you could be taking home more money. Uh, just by making a simple change to a simple form. And I'll share that with you tomorrow. Over and out. God bless. I will see you again shortly.